Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zaleski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CVRLT.com, recorded weekly in greater downtown Miami. This one-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the social media accounts of Peter Zaleski and Jenny Huertas.
Happy Monday, Miami. This is Peter Zaleski. I'm a condo consultant. I'm also the founder of the Miami Condo Investing Club. Check out my website, miamicondo.club. If you're listening to this podcast or watching this podcast live, that means it's Monday. It's the first day of the work week. It's about 4 o'clock or so, and chances are you're ready to get on with the rest of your week and do stuff after work. Hopefully it's not grocery shopping. Hopefully it's something where you get to go outside and sort of enjoy yourself a little bit. What we're going to do for the next hour is we are going to talk about what's going on in the South Florida condo market. Myself, as well as my partner, Jenny Huertas. She's a broker owner of a firm based in Greater Downtown Miami called CVR Realty. Check out our website, CVR Realty. For the next hour, we will give you a straight talk perspective of what's going on in the condo market. Jenny and I have both been on the ground more than 30 years. We're both actively involved in the real estate market. Jenny's been a broker for 20 years. Prior to that, she was a financier. So you're going to get straight talk. You're going to get a non-polished or what do you want to call it? Optimistic Convention and Visitor Bureau, Chamber of Commerce sort of perspective. Jenny and I don't always agree on everything, but what I can tell you is we're going to give you something to think about. Jenny, how's it going? Happy Monday. Happy August.
Happy Monday and first week of August. How are you, Peter?
I'm doing fine. You know, we're going to be talking about the halfway mark of the summer buying season. Kind of the way I view the market is you got basically wet and you got dry. You got beautiful weather and you got hot as can be. So right now we are in the hot as can be as well as the wet, although it hasn't been very wet. So to give you context, the summer we view as May through October, and winter we view as November through April. Basically, an easy way to think about it is during the winter, weather's great, carnival-like atmosphere down here. Everybody descends on this town. There's an event going on every weekend. And during the summer months, it's quieter. It tends to be maybe those from South America who are coming up here because I remember opposite weather. Maybe they come up here, but completely different vibe, completely different energy. So by looking at the market in 2 seasons, you can kind of compare and contrast. You also get some indicators about what happens in one market, one season, and how it dumps over into the other season. And that's what we're going to discuss, Jenny, because once we hit August, we're at the halfway point. In May, we came out with our predictions of what we would see in the summer buying season. Now we're going to revisit some of the stuff we talked about. We're also going to add some new things to kind of watch for. And all of this is a lead-in to where we're going to be for the winter buying season, which is really the busy time. A lot of people will go and kick the tires in the winter. One of the reasons is, especially if they're coming from up north, they want to come down here. They want to enjoy the weather and go to some events. And then what they'll most likely do is try to take a tax write-off. They'll look for real estate. And once they actually transact, because remember, once you go under contract, it's 30, 60 days to close. They'll actually transact effectively in the summertime, if you will, the second quarter as well as the third quarter. So, Jenny, generally speaking, is South Florida, the condo market, is it seasonal where it drops off, or does it sort of continue? Can you kind of just address, are there really 2 seasons the way I break it down, or do you see something a little bit differently? Because, I mean, you've been down here for 30 years. You've been doing real estate for 20 years. You did financing before that. Why don't you give the audience some sort of perspective? Is it seasonal in South Florida real estate in 2025?
It is, but we still have some activity in the summer. I think it's just different buyers. I think most people that live full-time in Florida wants to move in the summer, not only because the price is supposed to be a little better, and also because it's the vacations time, so they're gonna, if they have kids, they have to worry about the schools year and all that. So you see a lot of locals transacting in that part of the year rather than the winter season that is most likely people from the northern hemisphere. And so that's the difference that I can see throughout these years.
Yeah. And what about back in the day, back when you were first getting started in real estate, or even back when you were doing financing? Is it the same today as it was back then, or has it changed? Has it evolved? Can you sort of speak to that?
I think it's evolving. I believe there's more marked that you can see more the difference. But basically, you can be a full-time buyer and buy in the winter, or you can be a seasonal buyer that you live up north and transact in the summer. I think it's with time, it just seems to be more like you can tell the difference of the people that is visiting or thinking about investing in Florida now on the last few years than it was in the beginning of my career. But Miami is always it's moving very slowly lately as we had have the conversation on this podcast based on the stats. It's not because we want to say that it's like that. We're basing our information in stats, and numbers don't lie. So basically, we have a real small, I would say, past 2 years, if you ask me.
I want to continue on that, but let me just interject real quick. There's a colloquialism or a cliche, numbers don't lie, which you mentioned too. Well, according to President Donald Trump, he didn't like the job growth numbers that came out on Friday morning. So what did he do? He fired the head of the Bureau of Labor Statistics. This woman who was in power, in control or running the operation, she basically managed all kinds of statistician that works for the federal government. They collect information, all of them, and pieces, and lo and behold, it spits out a number. The number it spit out on Friday said that the job growth, which had preliminarily been reported in May, June, and then ultimately July, they had overshot. So they had to cut over 250,000 jobs. They came up with a new number, somewhere in the ballpark of just under 80,000, and now a blended average for job growth in the United States. So from May through July, average of about 35,000 jobs a month, according to CNBC. Boy, I wonder what happened, why suddenly you had this tremendous pullback in job growth. Oh, by the way, April the 2nd, they announced Liberation Day tariffs, minimum 10% tariffs across the board. They've come to realize, according to some articles I was doing, we were less than 4% tariffs across the board in the United States. Now we're pushing north of 17%. And imagine that. All of a sudden, they're not hiring as many people. So that's something to factor in. That's something we'll get into. But what's more critical is this person who ran the Bureau of Labor Statistics has been blown out and fired. And President Trump said that the reason he did it is that it was rigged in terms of the statistics, as well as it was done for political purposes. We'll have to see how that plays out. But Jenny, the question this sort of raises, and this is rhetorical, is if you cannot trust the federal government statistics, who exactly can you trust? I mean, I just know anecdotally, every time I hear anything about growth in China, it's always 10%. Their economy is always humming 10%, even though there's communities, according to pieces I've seen, they built entire cities and nobody's occupying it, but yet the growth continues to be 10% in China. Yes. So, this is something we'll dig into, but this is something brand new. It's just hitting. And I think if people are aware of it, or if they don't think it's a big deal, I would probably put it on par to almost blowing out, even though he can't. Federal Reserve Chairman Jerome Powell, who is an independent individual, he's still in place, but there's a lot of pressure to fire him. To me, changing the statistics is much more significant in terms of the long-term understanding of what's going on in the U.S. Economy, as well as the data that's shared, worldwide. So this is something we'll definitely have to watch out for, Jenny. But Jenny, going back to, do you want to comment
Yeah,
or
I
you want
say
me to continue? Okay.
I
Okay.
probably had to correct myself when I say stats that we pull out based on the information that we have access to.
There you
It's a
go.
scary, yeah, it is a scary what is happening because when this happens, when you don't know what to believe, then how do you make projections? It's too hard to make projections. The markets are projected in some way. So it has to be based on on stats. You like it or not, stats are numbers and numbers don't lie. But if, as you say, China said that they have 10% and they have empty cities. So I mean, we know that we won't believe those, but some people do. So yeah, that's problematic to say the least. Absolutely.
And Jenny, one little tidbit I want to hit on. A couple weeks ago, I did a column, came out on Sunday. I do a Sunday newsletter. It's called the Market Intelligence Report, Miami Condo Market Intelligence Report. Been putting it out since roughly 2007, 2008. So the piece I did 2 weeks ago was talking about how a brand new Atlanta Federal Reserve Bank of Atlanta report came out. It called a condo crisis in South Florida. And the report was based on what was going on in Miami. The way the central bank system works is that you have Washington, where Jerome Powell is, the gentleman that President Trump wants to get rid of because he will not cut interest rates. Although he's probably going to have to cut them now based on the job growth. So, and, he might get the job or the rate cut, for bad purposes and bad reasons rather than what he actually wanted it for. And the reason that could happen is because of what we're seeing on the job growth side. But basically, the Atlanta Fed, they came out with a report calling it a condo crisis in South Florida, and a prominent local real estate broker, somebody involved with all kinds of civic and industry organizations, came out and said that equilibrium in South Florida for the condo market is actually 9 months. It's always been 6 months. I documented it in my piece. 6 months is equilibrium. 6 months is a healthy market. And then when you look at the months of supply, this is for instance, if you put a property on the market, how and it sells based on previous transaction pace, how many months will it take to burn through everything that's currently on the market and nothing new comes on the market? So it gives you kind of a peace of mind. It gives you a sense of where the market is, what the equilibrium is between the buyers and sellers. And that's always been 6 months. Now there was this comment in the Federal Reserve report that came out talking about a condo crisis in South Florida, in which this local broker said it's actually, it's 9 months. That's a 50% increase effectively in what's a healthy market and what's not. And why is that important? Jenny, let me tell you why it's important. And this will be part of kind of where we're going to this, but I don't want to walk past or gloss over these statistics because they're really critical. So right now in Miami-Dade County, almost 16 months of condos are on the resale market today, as we sit here on the 4th of August, the first Monday in August. So if you say 6 months of supply is equilibrium, and now we're looking at 14 months, oh boy, this is seriously a buyer's market because there's too much to choose from. Now, when it's less than 6 months, sellers got the advantage because they're like, you want it, there's nothing out there you're going to pay top dollar. But when it's more, buyer gets to compete, or gets to get sellers to compete against each other. So right now, 16 months of supply in Miami-Dade County, and it's 6 months equilibrium, that seems more dramatic than if you suddenly say, oh, wait, it's 9 months. Oh, 16 months from 9, it's not necessarily as bad. It's only 90 days, but it's effectively recalibrating the entire way we look at the marketplace. So I want to point that out there. I keep getting in my soapbox, I keep hitting that. It's not necessarily a criticism of what's going on in the industry, but I think the Miami Association of Realtors should step forward. They should define exactly what each of these indicators are. Let everybody know, because in some of their public press releases recently, they are now adding the fact that equilibrium is 6 to 9 months, which never occurred before. And if it did, I would stand I would stand corrected if they were to somehow show me some sort of proof. But they have a chief economist over there. I'm calling out the Miami Association of Realtors. Come out, tell us exactly what equilibrium is, put it down in writing, and then stick to it, because this whole wiggle room about 6 to 9 months, it's not necessarily a good thing. Why? Because perception. It's a way to effectively, not mislead, but wink, wink, sort of make the situation seem rosier than it is when you're looking at 6 months of condo supply in Miami-Dade County, 16 months of condo supply and 13 months throughout South Florida. Why? Nothing's trading. How are you going to bring people in the market, Jenny, if people have questions about the information? I mean, you just discussed what the firing of the labor statistics Bureau of Labor Statistics person means. What about if suddenly we start changing numbers down here in South Florida? What about if they change them in the real estate market overall? What do you look back to? What's right? What's wrong? How do you gauge the marketplace?
Yeah, I think we need to do programs like this, and I'm sure others professional that are honest would. And we need to keep the stats and keep it honest. And it's not an opinion; it's the truth. And that the people have to understand that it's going to affect buyers and sellers in when you change the stats. It is not healthy more than 6 months, period. And that's the truth. And we.
Oh, and by the way, Jenny,
Uh-huh.
by the way, most listing agreements are for 6 months. So what are they going? Are they going to change the 6 listing agreements down to 9 months because 9 months is the equilibrium?
Well, actually, I'm telling my agents to do not. I mean, as you know, it's always negotiation between the sellers and the agents and the brokers, etc. But don't do it for 6 months because you're gonna have changes in the market happening pretty soon, hopefully. And you want to make the commitment for a year. Now, if you're doing a terrible job and the seller wants to take the listing because you're doing a terrible job, that's a different story. But if you're doing a good job and you are telling him, listen, this is the market trends, I think you need to adjust to it, then you should be able to make the commitment for longer, the seller with the listing agent.
Yeah. Okay. So, Jenny, let me get off my soapbox. Let's get into this halfway mark of the summer buying season. Again, August is the halfway point. Summer begins in May, goes through October. That leads us into the winter season. So, Jenny, before we start to get into it, we talked a little bit about the difference between kind of, how it's changed between summer and buyer. And did you recall, has there ever been any kind of like momentum or trend? So like, for instance, you go from winter when everybody's in town, they're all looking, and then all of a sudden you start closing once they head up back north, take 30 to 60 days to close. And there's a normal like pace, a normal momentum. Have you ever seen any normal momentum where once everybody was looking in the winter, they start to close, call it April, May, June, July. Does what goes on in August, September, October, does that lead into anything for the winter? Does that give you any indication as to what to expect as we go into the busy winter buying season of November through April?
No, it should. It should. I think things that are transacting are price-based. If the price is correct, you sell whatever you want to sell or you buy. So it should, though. It should. Mark,
okay. And talking. Yeah. Okay. So talking about price base, we're going to get into what I call the big 6. It was the big 6. Now it's the big 7. These are the issues that are outstanding that in May when we called a summer of paralysis by analysis. What that means is wait and see. You don't have enough information. You're sitting back and trying to figure out what the hell's going on. So you're basically going to sit on the sidelines and you'll let it kind of play out before you actually go forward and pull the trigger. Think of it like a pre-construction condo project. Somebody launches some new project. You don't know the developer or you don't know the pricing. You're like, yeah, maybe I can take a shot on this developer who's never built here before, but I put down my money and then I don't know what the quality is going to be like. So why don't I just wait on the sidelines, let it be constructed, and then once it's done, I'll pay a premium, but I can go in and I know what I'm getting. So that's kind of a paralysis by analysis or a wait and see approach. It's a more conservative. Other people are gunslingers. Well, they'll go in and they say, listen, if I go in early, I'm going to get a better price because as sales occur in a pre-construction building, they raise the price, they raise the price, they raise the price. Right. So going in the summer, Jenny, we called it a summer of paralysis by analysis or a summer of wait and see. Let me give you some real quick statistics before we get into what are the big 7 issues. And I'm going to give you an update, what we were seeing in May versus what we're seeing right now. And then you can sort of give me, you can agree with me or disagree with me because I take a position in terms of is it positive or is it negative on each side for the South Florida condo market, especially buyers. So Jenny, overall, to kind of set the scene, here we are. We sit here on August the 4th. What we got going on in South Florida, 26,330 condos are on the market, 26,330. The average asking price is about $819,000 per unit, $511 a foot, and 189 days on the market without going under contract and still actively available. So $119,000 a door, 189 days on the market. Now, if you go back to the winter season, remember, we look at it winter, summer, winter, summer, winter, summer. So in the winter, Jenny, we moved about 11,900 condos in Miami-Dade, Broward, Palm Beach County. Average price was just under $600,000 per unit. Remember, asking price today is $819 now, and what it sold for in the winter was $600,000. And then the average price per foot, $511 a foot today versus what did it trade for during the winter? $407 a foot. And then finally, in the winter, a condo in South Florida transacted, listed, under contract, completed, and funded 95 days versus today, 189 days. Now, if you do some rough math, Jenny, you're going to find out that during the winter, there were about 1,983 condos trading a month, and that's going to work out to 13.3 months of supply, 13.3 months of supply. And just to take that one step further, I have my 1% rule that says whatever the value is, your rent needs to equal 1% of that. If you have a $100,000 property, the rent needs to be $1,000. If you get $10,000 a month in rent, that means your condo is worth $1 million. If your buddy bought a condo for $300,000 and he tells you it's worth $1 million today, but he's getting $2,000 a month rent, it's really a $200,000 condo. So everybody's on board with that. So Jenny, asking price today is $819,000 for a condo in South Florida. The median rent during the winter was $2,300. So the proposition is buy this condo for $819,000 and you can make $2,300 a month in rent on it. And you got to cover your maintenance fee, your taxes, your insurance, everything.